Hello, everyone. Today I'm here with Walter Gomez, the founder of Alpha Hub. Today we're going to interview him on his background and how his experience has been scaling a fintech SaaS platform. Welcome, Walter.
Thank you, Hunter. I appreciate the time.
Getting into it, we're going to first start with, who you are. So for anyone who doesn't know you yet, who are you and what have you built?
Yeah, well, I'm going to tell you a little bit about myself. I come with a background in finance. I finished college early 2000s, and right there and right then, when I started working in private equity, I realized that I always wanted to make things better, and that was my first experience working in private equity. I was able to identify a lot of difficulties, inefficiencies, processes, and things that in general were broken. And that's when I kind of started thinking about, well, maybe there's something can be done about this. I felt like I was still too young. I didn't have all the experience. And I was involved in real estate transactions when it came to private equity deals. And so what I did is I created my first company that you just mentioned. That was Sullivan Pratt, and decided to create the first real estate project, and that's how everything got started.
Awesome. So, okay, you first got a job in private equity and then started Sullivan Pratt based on that experience then. Is that what I'm hearing?
Yeah, yeah, that's correct.
Awesome. Okay. So obviously Sullivan Pratt was, a real estate development firm in Costa Rica. You guys were focused on luxury residential, I believe. How did you end up in that business, luxury residential specifically?
We saw an opportunity back in those days. The real estate market was pretty hot. Actually, it was hot everywhere, and I should have known a little bit better because that was a bubble, what was going on. And up on the Pacific coast, there were a lot of developments happening, and there was still a lot of land that was available. Um, I had a lot of connections in the space, and I hired a couple people, and we started searching for a good piece of property that was close to the ocean, that it was in one of the pristine locations, not far from the airport, that it had a good view, that it was well priced because everything was going up and prices were skyrocketing. And so we saw an opportunity. We found a good sized piece of property, and we started working on it. Yeah, that was luxury real estate development. It had three different phases. Phase one, it was just plots. It was about 25 plots. They were about 10,000 square meters. Then the second phase was we were building four towers. Those all of those had ocean views on one side, on the other side it was mountain view. And then the third phase, it was a commercial stage.
Okay, so you started building all of this pre-2008 and then carried this forward. You basically went through the crisis with this type of business.
We went through the crisis. We got started around 2000, late 2006. That's when I started thinking about this. We got really hands-on in 2007. Got a whole crew. Got the architects, the engineers, the people who handle the permits. We were raising our own funds, of course. I had to put some of my money. Got some money from family, and then we started working on it. We were in the middle of it when the crisis just kind of happened, so it was a really tough situation, I can tell you.
Yeah, I can imagine, and we'll probably touch on that more a little bit later in the interview. So, next question is, so obviously real estate, is a kind of capital out the door. How did you finance those early projects? Where did the money come from? Obviously, you just mentioned you put some of your own money up.
Yeah, the rest I got some from some family, close relatives, and of course that wasn't enough. This was a multi-million dollar project. What we did is we started to engage some investors from the US and Canada. We kind of put together, that was like another whole thing we had to do, put together like a separate operation, similar to what we were doing in private equity back in the days, like doing the cold calling, doing, buying the leads, getting the intros, getting people involved, sign up. Those were the times when, a few of those things would go out by email. Other things will still go out by fax. You had the investors committed by fax and all of that. So that was an interesting process. We had a small crew, about 5 people, hitting the phones, kind of how it was.
So when you first got started with that first project or first few projects, did you picture growing the company beyond that, or what was the idea there? Did you think that you would expand beyond those projects and grow the firm, longer term over the course of a decade, or?
Yeah, my plan was not to have an economic crisis uh, to start with, and then to be able to expand the firm, have other projects. There were other opportunities, and that was the initial vision, but of course we couldn't carry on with it.
So I guess, yeah, the next question would be what would scale look like in, real estate development? How was the trajectory of that first company? Obviously, you started with those first few projects and, survived the financial crisis there. What did it look like scaling that company?
The plan was to then move into a mountain project, create a real estate development, not necessarily for people to come and retire. It could be, I saw an opportunity there for people that wanted to retire in Costa Rica, but also people that wanted to live close to the city and still, if they needed to go into the city, if they needed to go into the nearby towns, they still have access to that. So that was the next project, and that actually happened in 2011. Of course, after the economic crisis, everything crashed. We had an okay way out. We gave our investors their money back. We were the ones that lost the money. But in 2011, when I worked in that second project, that's what it was about, and that was a successful one.
Awesome. It's great to hear that there is success through the hardships if you just push through it. So leading into the next question, let's talk about the hard parts now. What would you say was the hardest stretch of running Sullivan Pratt, and what was going on at that time?
There were several things that were big of a challenge. One of them, it was raising capital. That was my first time raising capital on my own. Of course, I had a team, but it was all on me. It was, the success of the project was fully dependent on the capital we could raise, and we needed to do it quickly because, as you know, when it comes to real estate development, once you get going, it's not like you can stop and say, "Hey, just gonna fire everybody. You guys have construction. You guys stop submitting permits and doing all of that. Just gonna put it off for 3 months until we raise some more money." So it was 24/7 working on it, trying to get very creative. Those days were a little bit easier. The market was hot. Everything was on green. So it was a little bit easier than later on, but it's still a challenge. The other part that was a challenge was managing everything, managing the capital raise, managing the actual project, the development, making sure that permits were coming out on time, making sure we were fully staffed, making sure, everything was aligned. That was a big challenge.
Wow, that sounds like a lot. So was there any one decision that kind of comes to mind where, you thought you had everything right, you did the research and ultimately it turned out to be wrong? Is there anything like that that happened along the way?
Yes, of course, you always make mistakes, especially when you are starting, and that's just kind of the nature of the evolution, I guess you can say. Being younger at that time, I was about 26 when that was 2007. Those were, very early days for me as an entrepreneur, very early days for me running a business. Sometimes it was a challenge for you to get people to pay attention and take you seriously. I think that was a challenge. And I hired somebody who was going to be working just as a general manager, you could say, a more experienced guy. He came from Canada. He had a similar background working in real estate developments, background in private equity and raising funds. And that didn't work out. That was a really bad call. But I think I cut it on time, but I had to, I had to cut your losses, which I think I did, but that wasn't a good call at all.
So obviously real estate, lives and dies on capital. Across those years, how did you fund the growth of the projects, fund the growth of this company? Is there anything that you'd wish you'd understood about raising capital and actually pitching investors earlier that you think would have made a big difference?
Yes, I think one of the main takeaways from that experience was that you need to pitch niche investors. I was just pitching about anybody and everybody that I could talk to. Um, Later on, I found out that if I was talking to investors that were interested primarily in real estate, that made a big difference in the conversation, the process, not so much pushback. That was a much better process, I think. And when it comes to raising capital between one project and the other, we actually had to stop. Around 2009, we had to put a pause. We had to give some money back to investors. We had to realign, just wait on the sidelines, wait for the market to come back. At that point in time, I did invest in the stock markets. I did invest in Forex a little bit. And then in 2011, that's when we got back to real estate development.
So looking back, how much of the friction, you hit with scaling Sullivan Pratt? Obviously, the, financial crisis was a big friction point. But in terms of other friction points, how much of that was related to actually capital access and investor relationships, building, the right network of investors?
That was the first time that I think I felt like there was a big gap in the industry, that there was a big need for a change. When you were talking to investors, and it was just really difficult to initially find the right investors. It wasn't like you could go and do an online search, hey, real estate investors, and I found a list of 1,000 investors. It's like something you kind of had to do manually. During those times, you will buy lists. So you will purchase investor leads. Those were like accredited investors or fresh investors. They had different names, and that's the only thing we could get access to. There wasn't like a single primary point of contact where we could find investors. You could pitch them quickly. You could get through the whole process and go from top of the funnel to bottom of the funnel quickly and identify who were your warm leads and those that you were going to close. It was a very unorganized process, and I saw that happening in private equity, of course. When you are looking at established firm, it's a whole different story because they already have their group of investors, their network, and it's a different setup. But when you are starting off and you're brand new in the industry, it's a huge challenge.
So how did let's transition now and talk about the end of the Sullivan Pratt experience. How did that, come to a close, or what changed? It sounds like a seed was planted during that experience that you might want to, make the private capital market more efficient in terms of companies raising capital, and investors and finding investors. Is that kind of how you came to the decision to shut down with Sullivan Pratt, or did something else happen?
Yeah, absolutely. 2011 came. I felt like we could have done better if we didn't have to deal with the economic crisis. Of course, there was room for improvement across the board, and I felt like there was a better time. It was everything was just better aligned at that point in time for us to have the second project. And we got involved with the second project. That was that mountain development that I was telling you about before. It was a successful one. It was a big piece of land, not too far away from the city. When we were working on the first project up on the coast, I had to travel every single day, every single week. And sometimes I'll spend a week or two there and then I'll come back home. And that was a little bit difficult for me, and staying away from my family and all of that. And then with this other project, that was much easier. It was just a 1 hour drive from my home. The traffic was better in the days, and but I ran into the same issues. I felt like raising capital was still a challenge. It was a little bit better. We had learned some lessons. We figured out that we needed to go after those real estate investors instead of any investor. And before I got into it, I started talking to investors, bringing my databases from before, getting back into into the game, and I connected with some local investors. Those were people interested in real estate development, interested in investing. Some people that coming down from Canada and the US to retire in Costa Rica, and they still didn't know what to do. So those were really good. I think that kind of opened up the doors for a network. I mostly got investors from Canada and Europe, a couple from the US, but they came from the same network, from the same group. They were like, hey, we have a chat of retirees. I don't know if there was a chat at that time, but we have a group of retirees that want to move to Costa Rica. They have not taken the step forward yet. They just kind of looking at options. I was like, well, let me talk to all of them. Let's see if they are excited about something like this. And that's really how we got that sold out. And then it was just about development and delivering, what the contract said.
Awesome. So there was no, big exit here where you sold the company. Basically, the projects you were already working on completed, the investors were happy, and you just stepped away from, real estate development essentially.
Yeah, that's really what happened. We kind of did an exit from the company. One of the first investors that was talking to us and that had moved into that community, he wanted to keep the real estate development company. I don't think he did anything with it. He just kind of let it die. But yeah, we made a little bit of money off of that. But where we made the most money was out of the development itself.
Okay, we've talked about Sullivan Pratt. Now let's switch over to talking about Alpha Hub, the brand you're currently scaling under consortium capital. So obviously right now Alpha Hub has the data room, it has the deal flow and CRM pipeline features. It's scaling a private capital marketplace. It aggregates these all into one place to make it an easy one-stop shop for investors and startups. Back when you were raising capital for Sullivan Pratt, how would these tools have benefited your capital raising efforts?
It would have been great to have at least some of those. We were keeping track of our investors with Excel sheets. We were keeping track of the contracts. We had to scan many of them, as I told you before. Those were the days, especially on the first project. Email was popular, but not everybody was using it. We were still taking fax. We were still taking checks, doing all of those things. So a lot of those things needed to be scanned and stored in, a hard drive or CD at that time. and that's kind of how we manage things. When it came to a CRM system, that would have been super useful. We didn't have anything like that. We had an Excel sheet. That's what it was. When it came to deal discovery, there wasn't anything like that. None of those tools were around.
Let's dig a little bit into, granularly what the process looks like on the investor side currently, what Alpha Hub is trying to fix. So for a fund or a family office hunting for quality deal flow today, what does that process usually look like, and where do you think it typically breaks down?
There are different colors and shapes to that process. It depends on the segment that you're looking at, and it depends on the maturity of that company or that specific sponsor or fund. Let's talk about established funds. This is similar to an entrepreneur. Once you have done something in the past, then you have gained the trust of your investors, and it's a lot easier for you to raise capital. The same happens to a fund. If this is your first fund, you're going to struggle. You're going to have a hard time finding the LPs, the limited partners that do invest in your fund because the credibility is not there, the track record is not there. You're just a new guy trying to prove yourself, and you just have to be really good at selling. That's what I have to say. And you have to have a pretty wide network of people so you can get some of those involved. Once you have created your first fund, and if it was a successful one, then it just kind of makes things easier going down the road. And that's kind of how it is for established funds. It's really not a huge challenge. It's more of a exclusive network type of play. The same for family offices, but on the other side of the table. Family offices, they do have their funds. It's typically not a scenario where they have to go and raise money. They're established, they have their funds in place. What they need is deal discovery, they need deal flow. And depending on the location, depending on the type of network that they are connected into, then that either makes it very easy or it makes it very difficult. Typically, for a single family office, that is the challenge. They get access to some deals, they get access to some opportunities that come from their extended network, but they miss on a lot of them. And one of the biggest challenges is when you're looking at a single family office and you get a lot of deal flow, is to be able to manage that deal flow, to be able to identify what are those opportunities that are worth for you to take a look at and spend the time on, and what are those that are not going to be good for you. They do not fit your portfolio. Imagine a family office that has 150 different opportunities, and when you're talking about a single family office, it's typically two or three people just working together. Sometimes it's even just a single person running a family office, and it's very impossible for you to manage that type of deal flow and do a real good job on identifying those opportunities that you should be focusing on.
Okay, let's flip over to the the founder side now. Obviously, you're a seasoned founder who's been through it already. When you're trying to raise or find the right investors, what advice could you give to new founders, to new startup companies, and where do you see that Alpha Hub can actually help them?
I'm going to tell you something that you do not find in videos. You're not going to find this in videos. You're not going to find this in literature. This comes from experience. They always are going to tell you, well, if you're going to create a project, make sure you prepare yourself, start working on creating a network, doing this, doing that, 6, 12 months before you start getting into the actual project. That doesn't happen very often. If you are working on a project, if you have an idea, you want to execute it right now, and that has to do with timing. Timing is now. This is an opportunity for you to get to market now, not in 12 months. 12 months, the market is going to be different. And those investors that you're talking to right now, they're not going to remember you in 12 months. So that's not a really useful piece of advice. What I'll say is that not everybody is built for this. If it was easy, everybody will do it. And you just have to be prepared to go to work. And what that means is very long days, very little sleep, a lot of stress, a lot of rejection, and you just have to deal with it. And the way to deal with it is for you to deal with yourself. If you can deal with yourself, if you can keep yourself motivated, if you can keep yourself going, then you're going to make it happen eventually. You just have to know that, just have to be confident that it's going to happen. You just have to listen. Everybody tells you this. You have to listen to investors, but you have to be a little bit, you have kind of to filter those opinions because you have to understand where investors come from. They sometimes they give you just a generic answer. They say, yeah, no, this doesn't work because of this. But if you've done the research, if you understand the market, if you understand what you're building, and you are completely, absolutely 100% sure that this is going to make an impact and this is going to be a business. It's not just going to be an idea. This is going to be a revenue producing business because everything, all other factors validated. It is the right time to market because competitors that you looked at, they don't have what you have. You have a differentiator, you have a large market, and all the conditions are set for you to be successful. Then you just have to keep going. Just have to keep going, and eventually you will find an investor. We had our good struggle finding investors. I at the end I ran into an investor who got involved in some of the early real estate projects with us. And he came back to the table when we created Consortia Capital and started thinking about this. He wrote the first check. He kind of sat on the sidelines, just kind of waiting and see what was happening. And then he came back with his two partners. He's got a family office and his two business partners got on board, and we got a commitment from them, and we're working on closing the round with these guys. So that's typically how it does work. Of course, not everybody has a network of investors. You're gonna have to go hunt for them, find them, and chase them, and that makes things really hard. So you just have to be prepared for it.
So I like what you were saying, at the beginning there, just about how these startup companies, these founders, they need to kind of move fast, right? And one of my favorite quotes is "Money loves speed." If you have an idea, you kind of have to get it out there, right? get it on the market and start getting data essentially for the product, right?
That's right. Absolutely. I agree 100%.
Now let's get into talking a little bit about Alpha Hub's success raising capital so far. So obviously right now Alpha Hub is in the seed round or raising for the seed round. Before this round, you also raised a pre-seed for Alpha Hub and was able to acquire Paraforge, the private capital software platform that had already facilitated over $100 million in private capital transactions. How did that pre-seed series or that pre-seed stage go? And did you raise what you had set out to raise initially?
Yes, actually, we raised a little more. We were looking for 1 million. We ended up raising 1.3 million. And the way we did that is I tap into those investors from the previous real estate deals, some of them, some other warm introductions, some of my immediate network. That's how it really was done. I didn't have a pretty extensive network, and these were investors that were not focused on fintech. They didn't know a whole lot about startups, so they were very cautious. We didn't have some very large checks. It was a bunch of small checks, some 15K, 10K, some others were like 25, 50Ks. I think the largest check we got was about 250K from one of our investors. But that's really how it was done. I felt like starting from scratch, tapping into a new group of investors that were more focused, that were more aligned to what we were doing, it was going to be a little more challenging. And so we started working on the ones that I knew and some introductions made by them.
So you went from raising capital for real estate development projects to now raising capital for private capital SaaS fintech platform. Which of those do you think is harder to raise capital for and why?
I don't think one is harder than the other. I think the times are a little bit different. It all has to do with having access to the right investors. That makes things a lot easier. It's like if you are selling sports cars, you're not gonna go sell it to an 85-year-old guy. You're gonna sell it to the 20s, 30s, 40-year-old guy that is into that. This is the same thing. If you're trying to sell something to somebody that does not understand it or does not see the value on what you are building, it's a really hard sell, and it's probably not gonna happen. And that is not exclusive to fintech. It's not exclusive to real estate. I think it does apply to all industries.
Where is Alpha Hub today, and how do you see the next few years going with scaling this platform?
Alpha Hub is in a really good place right now. We released our MVP a couple months ago. We are working on the alpha release right now, making really strong progress. We are bringing out some of the AI components. We're training our models. We're feeding the data. We are setting ourselves in a good position to scale, in a good position from a technological perspective, building the right infrastructure, creating a very strong backbone that allow us to grow without carrying on technical debt. That from the development perspective. From the business perspective, this is the right time for us to go to market. This is the right time for us to bring a solution that has been needed for a long time in the industry. And I believe that our users do appreciate that. We have been onboarding an exclusive group of users. Those do include some post-revenue companies that are doing a Series A. Those do involve institutional investors, investment groups, not only in the US, but also in the Middle East. And this kind of answers the second part of your question, uh, how we see this going forward. We are going to bring, of course, the alpha release. That's going to open the door for revenue. That is going to allow us to charge for some of the features. These are going to be more advanced. The AI components are going to be more mature at that point. And then we're going to work on a beta release. The beta release is going to be pretty much open for everyone. And then we're going to have a full release in a few months. The path going forward is going to open the door for some expansion possibilities. We are already doing some groundwork in the Middle East. We want to be in Saudi Arabia. We want to be in the Emirates. And we have people from our team that are opening those stores right now. We are working on creating the legal structures. We're creating the introductions, building the network, having the conversations with the investors, having the conversations with the potential partners. So that's how we see this path going forward. As most people do know, this is not a single platform type of play. There's a huge problem in the private capital markets industry, and the way to fix those problems and those issues is building a comprehensive solution. And that's exactly what we're doing. We're starting with Alpha Hub to solve the primary issues problem. And then there's another problem that comes after an investor gets involved. And that is, how do I get liquidity? How do I exit from this company? And that is why we're going to be building a secondary market that involves a distributed ledger component that allows for traceability, that allows for transactions to be settled and clear, if not in real time, pretty close to real time. We are going to bring market makers, liquidity providers, so that way we can build the liquid environment that we envision and we can deliver the solution that is needed. That's the second platform. The last platform is going to be a terminal similar to the Bloomberg terminal, but designed for private capital markets. And all of them together, they will form the Alpha Suite. The Alpha Suite is going to change the way people are doing business in private equity, in venture capital, in M&A across the board.
That's a lot of exciting upcoming projects, and going with the the current hot topics of AI and blockchain technology. So a lot of exciting stuff happening there. What would you say excites you most about what's coming, and why? What's the most exciting aspect for you of what you're building here with this whole Alpha Hub ecosystem?
This is like watching a baby grow. Every step along the process is very exciting to me. Every time we release a new feature, it's very exciting. Every time we see a new AI component coming out, it's exciting. Every time we speak to an investor, every time we speak to a new user, it's very exciting to know that we are heading the right direction, that we are building the right solution, and that people are waiting for this. So I'll say that you have to enjoy every step along the way. The most exciting time is going to be once we are able to fully launch the platform, once we have all of the Alpha Suite completely built, and see the type of impact and change that we are bringing to the market.
Okay, that's it for the questions I have. If there's an investor here that wants to get involved with Alpha Hub or get on our platform, or a company that wants to start raising capital, they can go to Alpha Hub or alpha-hub.ai.com. If you want to connect with Consortia Capital, we have a website as well as a LinkedIn page. So is there anything else you'd like to add, Walter?
No, I would just like to say that we are very excited to welcome new users. We are open for partnerships. We like to speak to investors. I encourage entrepreneurs, early stage companies, and of course late stage companies to join the platform, and we can make a big difference in the market all together.